Most entrepreneurs scramble during tax season, but the truly strategic ones, those who compound wealth intelligently, act before the tax year ends. I'm a chartered accountant, and every insight you'll hear today is grounded in real case studies, regulatory clarity, and wealth-building strategies used by Big Four firms and top-tier consulting companies. Let's explore the 3 critical wealth moves smart entrepreneurs must make now to reduce exposure and future-proof capital. Wealth move number 1. Time your income intelligently. High income this year? Consider deferring. Low income next year? Pull it forward. US founders can use cash versus accrual flexibility. UK entrepreneurs use income splitting. EU business owners often benefit from wrapper-based deferment. This is proactive tax arbitrage, a precision tool, not guesswork. Wealth move number 2. Prepay expenses with purpose. Pull forward payments for subscriptions, software, insurance, or advisory services to capture this year's deductions. In the US, Section 179 enables full deduction of qualifying purchases. In the UK, max out your annual investment allowance before it resets. This is high-impact fiscal engineering used by strategic finance leaders. Wealth move number 3. Maximize tax-sheltered contributions. Solo 401ks, SEP IRAs, SIPPs, and ISAs are not just retirement tools. They're tax-advantaged growth machines. By sheltering more today, you protect wealth from taxation and unlock compounding without erosion. Top consulting firms model these moves into every high net worth plan. Let's recap. Time your income. Use legal positioning tools. Prepay key expenses. Sharpen your deduction profile. Maximize shelters. Protect and compound wealth. These are tips. They're part of a structured tax optimization strategy used by global advisory teams. Subscribe to CA Wealth Workshop, where every episode is crafted by a chartered accountant with research-level depth, ensuring what you hear is accurate, actionable, and elite.